Greetings, members one and all of the Salivation Nation. Does gold's latest rally forecast a possible return to record price levels? We'll kind of explore that in this article from MarketWatch. But warning ahead, you're going to see some names and some opinions in here that are going to be very biased. And MarketWatch is typically a pretty balanced publication, but in this case, there's obviously some opinion. Of course, there's nothing wrong with opinion, but you have to recognize it for what it is and understand the true nature and the reasons why we hold precious metals. But let's explore this with the subheading of Analysts Weigh Pros and Cons of Gold Investment Choices. It says that gold has moved higher for the year after stalling just below the $1,300 an ounce mark for weeks. All the factors for the metal to rally to record levels might finally be falling into place. But are they really? You have to really kind of question that. Gold does well in a period of dollar weakness, inflation, and economic uncertainty, says Peter Schiff, Chief Global Strategist at Euro-Pacific Capital, a division of Alliance Global Partners. We're about to get all three. And so that's the thing. He's right. Gold does typically do well in periods of economic weakness, inflation, and economic uncertainty. And that is the track record that gold has held for some time. But gold prices were held back by expectations that the Federal Reserve's monetary tightening cycle would continue for years, argues Schiff. Everyone now recognizes that the Fed is done tightening and that the bias is in the other direction, but few understand just how far and how fast the Fed will have to loosen monetary policy in the coming months, he adds. In Schiff's view, the economy is approaching a severe recession that will prompt the central bank to launch another round of quantitative easing. This would be the fourth round, or asset buying to drive down interest rates. He predicts that the next round of QE will be much larger than prior ones. Given that, gold should be rocketing upwards, he said. And here's a chart that shows where gold has been. You can see that it's pulling up pretty high here. And I'll stop right there and say where I have a problem. This is really where I have a problem with his forecast. It's I do believe we are overdue for some sort of economic downturn or recession, but it may not be as bad as prior ones, considering some of the policy decisions being made as of late. And where there's a lot of economic factors that prove a positive economy, and they could go on for quite some time. It's very difficult. There's a lot of resilience in the economy, and I believe had we not acted in the way we did in 2007 and 2008, we'd probably be in a much better position now than we were then with the quantitative easing. But I think that's part of what the free market system is about. And the free market system, by its definition, really, part of what it does is it does correct itself. There's always times of economic uncertainty, but if you practice the values of what the free market enterprise system is about, it is, for all intents and purposes, self-correcting in time. And so this saying that the quantitative easing will cause everything to just go crazy. Yes, that did happen before, but nonetheless, the third round of quantitative easing did not have the effect on gold and silver. In fact, it's quite the opposite. Gold continued to go down after the third round of quantitative easing, after the Great Recession had occurred. It talks about gold futures settling at $1,346.10 an ounce on Friday, extending the streak of gains to an eighth straight session and up about 2.7% for the week. For gold's latest rise to stick, Brian London, editor of Gold Newsletter, says prices will have to top $1,375 an ounce. Getting through that hurdle will be difficult, he maintains, but might clear the way to $1,500 by year end, which is not a level that we've seen since April 2013. Schiff's price forecast is even rosier. Gold has the potential to make a tremendous move, he says. Gold held a tight range over the past 3 or 4 years and held a floor of about $1,200 despite virtually no conviction that investors currently need a hedge against inflation or a falling dollar. When sentiment finally changes, gold could rocket from its current well-established base to levels much higher than the prior highs established almost a decade ago, Schiff says. Prices topped $1,900 an ounce in September 2011. Well, we all know what caused that, and I talked about that in a video, but also keep in mind that that was an anomaly for both silver and gold. And more than likely, that may not happen again. I mean, remember, the recession happened in 2007 and beginning in 2008. We didn't see these prices climb to those levels until 2011. So that's one thing to consider. So we can't really use that as a benchmark, in my opinion. But the article goes on to say that picking the best way to invest in the precious metal has become more important than the past. People looking to establish long-term holdings in physical gold should use a combination of coins and bars and gold certificates held off-site, says Schiff. Access to the actual metal will always be the ultimate safety net, he adds, while gold certificates, which indicate ownership of gold, offer much of the safety of bullion without the storage costs and security risk. Well, it's one of those things, if you don't hold it, you don't own it. And in my case, holding them off-site does not mean a custodian per se. It's usually family and friends where I have those held off-site. Gold exchange traded funds, especially SPDR gold shares, offer extreme convenience and low cost, but they are passive investment vehicles, he said. Investors might also consider buying gold miner shares. Most investors still believe that the gold will fall in the years to come, and the price of mining shares reflects that dim view, says Schiff. Van Eck Vector's Gold Miners offers exposure to mining stocks. And another thing too, when you invest in a mining stock, you're investing in the company itself. It's not really the metal. It's the health of the company and what they're doing, their profits and everything. They could do well if there's a lot more mining of gold, if the price goes up or whatever. There's potential they could do well, but there's other factors that you have to consider and wage your risk factor. That's an investment vehicle. And by the way, speaking of investment vehicles, I don't believe the word investment should be synonymous with gold and silver as their insurance, their hedges against economic instability. There are also gold trading platforms. GoldX doesn't own gold, but facilitates dealing at the best prices for the metal. Metal sold through GoldX is 100% backed by fully allocated physical gold, says Sylvia Carrasco, its chief executive officer. Every gold ounce belongs to the client from beginning to end. And, of course, the thing is about the allocated physical gold. That's really the key. I'd want to take ownership of it. Schiff advises and invests in Gold Money, which provides an online investment platform to buy and sell precious metals. He favors gold-backed debit cards. Gold Money uses Gold Money prepaid card. And, it's one of those things where, yeah, the idea sounds good, but you have to look at the fine print of these types of things. With anything that's digitally backed or what have you, I know some precious metals dealers out there, and I've talked about them, where you can basically buy gold at, for as little as, 1/100th of an ounce in those increments. And you pay, some amount over spot. I guess there's no storage fees or what have you. And it allows you to cash out using their platforms. In other words, Amex and Provident Metals, I think, have those. But London of Gold Newsletters notes that gold has a 4,000-year track record of financial protection in the innumerable instances of debt currency devaluations. That might be another reason to get excited about the recent rally. And, it is a good reason to be excited that the prices are creeping up a bit. Most of us are kind of jaded in a way. It does seem like when the prices go up, people tend to be bull with the prediction saying, okay, now that it's moved up, $20, $30, I'm going to go ahead and be bolder in my predictions that it's going to go here or there. I've been victim to that in the past with gold and silver. But nonetheless, I think it's good to have measured optimism in terms of our precious metal prices. But really, in the end, gold and silver both it's to our benefit in many ways that they stay down, because that indicates, less fear in the economic situation, and most economic indicators point in a positive direction. And I believe really that probably for the rest of this year, we're probably going to be fine, barring some black swan event or other thing that could cause the prices to go up, or economic uncertainty and fear out there. There's certainly a number of things that could contribute to it, but by and large, uh, things are going well in the economy by many measures. And so I think we should celebrate that and hope and wish for a better economy. And we'll see how things play out there. But again, very interesting. But as for all these things, you got to be somewhat skeptical, or at least read things, take it for a grain of salt, no matter what anybody says. And you hear names like Peter Schiff, you begin to think, okay, what is his line of work? What's he promoting here? So you have to kind of take that into consideration when making decisions on your own. I believe, as always the case, is to be smart and frugal with your money and precious metals. I believe that it's good to keep a balanced portfolio, because you don't want to be burned by anything in that terms. Holding precious metals is a fun way to save, but it shouldn't be even your full savings account either. I believe it's just a portion thereof. So it's just a matter of being smart about your money and about where you're at, and do your due diligence and research. I think that's fundamentally important. It's something in being fiscally responsible, not going into debt to purchase anything that you don't have to. Obviously, a home and car are exceptions, but even with those, it's good to get those paid down as quickly as possible. It's about protecting yourself, and that's what gold and silver is about. And so when you hear people talking, and make things seem rosier than they could be, or what they think they will, to get you to buy anything, that's not good. Do your own due diligence. Don't believe anything that any professional even says, or what I say or anybody else on YouTube. I just think it's a good idea to hold precious metals as a part of your portfolio. I'd like to extend a multitude of gratitude to you all for watching. Post your thoughts below, and encourage you to please rate, share, and subscribe.